Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where myself, Ty Carr, and two other accountants, Charlie Zigmund.
Hi, everybody.
And Tammy Hess.
Hello, everyone.
We review what's going on the last couple of weeks in news, business, finance, tax, or maybe none of those things. But what you can count on is that the three of us are going to review those things in an accountant's perspective. Well, let's talk about what we're going to get into today. Return to the office and sit on Zoom. The IRS is getting defensive on targeting low-income tax filers. I'm going to present my next topic in a series titled What Craft Distillery Operators Want and Need from Their Accounting. Cannabis marketing. What are the problems? And finally, reality TV does tax evasion. Okay, well, we'll start it out with Charlie today. Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where myself, Ty Carr, and two other accountants, Charlie Zigmund.
Hi, everybody.
And Tammy Hess.
Hello, everyone.
We review what's going on the last couple of weeks in news, business, finance, tax, or maybe none of those things. But what you can count on is that the three of us are going to review those things in an accountant's perspective. Well, let's talk about what we're going to get into today. Return to the office and sit on Zoom. The IRS is getting defensive on targeting low-income tax filers. I'm going to present my next topic in a series titled What Craft Distillery Operators Want and Need from Their Accounting. Cannabis marketing. What are the problems? And finally, reality TV does tax evasion. Okay, well, we'll start it out with Charlie today.
All right, so I've got an article we can talk about that I thought would be relevant to these times that we're living in. So in Bloomberg.com, they've got an article called Employees Are Returning to the Office Just to Sit on Zoom Calls. And so what they're saying is that there's a bunch of companies that are, pushing for people to come back to work, and they are, but they're finding that when they get there, they want them to be on Zoom calls with people who are sometimes in the room right next door to them. And people are reporting that that's actually a big distraction, because before they used to be at a Zoom call where they were able to not hear those around them. But now that they're trying to find this really good middle ground of in-office work and, some people still working at home, especially because some companies are doing, flex plans where you might work 1 day in the office, 4 days at home, and that kind of a thing. And so it's just kind of an interesting problem as I'm looking at it, because it's like, for me, basically businesses need to decide if they're going to go all the way remote and just accept what that means and stick with it, or if they really want to commit to in-person. They talked about in the article a couple of different ways that they could make it more, that they could change things to make it more usable. So they might have people in different parts of the office, or they'll do things with blinds and shades and whatnot so that they're not as easily distracted by people around them. But I want to get you guys' take on, is this what should be happening, or should companies just pick one or the other, or is there maybe a better way to accommodate this whole hybrid scenario?
I do think a lot of companies are suffering from trying to include best practices and include a little bit of everything and not necessarily picking a lane. And I'll describe that a little bit more. Like when you say pick one or the other, it reminds me of a kind of a parallel topic around this. But but in terms of whether people should use Zoom even if they're in the office, I don't think it necessarily has to be an all or nothing. Like if you're in the office, don't use the Zoom. I was talking to a colleague the other day who was asking, how did we as a firm get our work done with clients? And now that we can be back in person, are we finding that much easier than the days during lockdown when we had to do things via Zoom or some sort of Yeah, where we had to do or some other kind of Zoom like program like Google Meet or whatever, right? And the point that I made was, well, actually, when it comes to the work, sometimes Zoom is a lot more convenient in the sense of if we're trying to share a spreadsheet and go through it together, it might be more convenient to do that over a Zoom where you can share the screen and somebody can comfortably in their own seat watch what's going on with the spreadsheet than everybody huddling around one, looking over the shoulder of one person's computer or something, right? So I think that actually the technology that allows you to basically collaborate from your own seat is a good technology that works well, even if both people are in the office. It can work well. So yeah, that's my thought on it. But and I'll pause, but I'll circle back to. I want to circle back to make a comment on this pick one lane issue because I think there's a parallel part of this discussion that where I do think companies really should pick a lane.
Yeah, so I think that what I thought was interesting is that at the end of the day, everyone's trying to be flexible. I think that in terms of trying to say everyone come in person, that's not going to work for folks, as much. And so really trying to be flexible and having some people, be in the office on some days, some people be in the office on others. It's kind of requiring the still need for Zoom in person type of meetings. I think that what I would encourage folks to do is be flexible in the kind of rollout of that, because you're going to learn some weird things that happen. Like being in a conference room and having most of the people on their laptops in the conference room on a meeting, Zoom meeting, or whether it's Zoom or something else, it's kind of weird in that way. It's like, what am I supposed to be looking at, my laptop or the person talking or both? There's some nuances. Plus you have to figure out the whole whose microphone's on and, whose speakers are playing so you don't get the weird feedback. So I think that there's just ironing out some of those kinks and those challenges, because at the end of the day, most people are going to find that they're going to have to utilize some type of Zoom or some type of collaboration of meetings for those who are in the office, as well as connecting with those who are outside the office when those need to be combined in some kind of manner. So I don't know. I do think that it's so early right now where people are coming back and we're still utilizing that we need some patience on how to iron out some of those kinks, because I do think that the flexible hybrid type of working style is going to be here to stay. Or it could be really difficult if you do decide to pick a lane and to say everyone's in the office, therefore eliminating the need for some type of video conferencing that you're going to probably have some work folks that are not going to want to participate in that anymore, in terms of they like the idea of the remote working style. So I don't know the best answer to it, but I do think that there's some of those things need to be ironed out, because it is a little bit weird and confusing and distracting, as well as sometimes just the infrastructure at the office can't handle having 50 people on a Zoom meeting on that standpoint too. But I will say one of the things to also consider is it is really hard when you're having a group in-person meeting and you're calling in to try to get kind of into the conversation, because you have to kind of figure out how do you jump in when they don't see your visual cues, or they may see it but they're too busy in a discussion. So it's just trying to figure out how to iron those out. I would say maybe do some practice runs before you're doing like a prime time really important meeting, so that you can make sure that those things are ironed out.
No, I agree completely. And I think you're right. It's here to stay. And, everybody's just going to have to kind of find a way to make it work. One thing I thought the article could have brought up, but it didn't, was it was talking about how they were hearing all these echoes as other people were on the call. I was thinking something as simple as just headphones, so that the sound is going into so that's not getting picked up by the mics. And so I'm thinking like little practical things like that might get things running smoother. But yeah, so that's what I thought about it. Do you have another article we can talk about, Tammy?
I do. Ty, did you want to circle back with another comment though?
Oh yeah. I was going to throw out there that under this master topic of, come on, companies, pick a lane. Are you going to make people come into the office or not come into the office? The Zoom call or the video conferencing, whether that's going to be used or not, is one topic. And the other topic is just how they utilize office space. One of the things that I've heard is going on in some of the big companies, which just seems flat out ridiculous, is that they in anticipation of kind of the new working environment and during COVID, and then in anticipation of what it might be, they basically cut down on the amount of office space that they have and went to more of a hoteling type system where people had to like check into their desks. They don't have permanent locations, it's more, and so they basically reduced the ability for people to basically have a comfortable space in and of their own. And then on top of that, and then they turned around and have been riding this on the other side, have been riding the wave of trying to embrace a hybrid environment where they require people to come into the office a certain number of days a week. So, I think to me, that, on the video conferencing side, I think everything that you guys said makes sense to me. There could be technology challenges. You have to figure those out. But I think that piece, could be compromised. Like you don't necessarily have to choose one or the other. But I think it's ridiculous for companies to be straddling the fence on whether they're going to require people to come into the office or not, while they also are looking at how to reduce the cost of having an office at the same time. I think you can't, it's not reasonable to be doing both things at the same time. It shows like it just reeks of bad planning and bureaucratic thinking.
I have something to add to that now that you brought that up, because there are some folks that in order for them to work at home, they actually had to bring their CPUs, their full, computers, and they weren't working off of a laptop. They were actually working off of a desktop type of CPU unit, in which the companies, essentially in terms of being flexible, gave the employees a choice of like, do you want to stay and have your office be at your home with your established, computer setup, or do you want to come into the office? But you can't have both because it's not as easy as just plugging in a laptop into a docking station and going. So they did have to kind of think about that in terms of what they were offering to folks. And so it is, I think we've said this before with, some other types of, whenever you decide to do a mandate or all or nothing or a hybrid or whatever kind of decision, you have to kind of think through some of these weird, either technical issues or just logistics issues in that sense. Like to Ty's point, if you kind of downsized your office and then you're trying to do some hoteling and you can't have everyone at the office at the same time. So what does that look like for folks? So really thinking through all those things before you start making updates to your policy is probably pretty important at this point.
No, I agree 100%. And just to kind of one last thought on that same point was, a lot of times people like to work remote so that they can work in a place that is maybe not in the same city as where they would normally work. And suddenly when you have this hybrid answer that requires them to be there one day a week, it may not enable them to do that. And so it kind of gives up on what is maybe one of the biggest strong points of remote work in the first place. So yeah, I agree completely. Do you have another one we can talk about, Tammy?
I do. So I have a follow-up on a topic we discussed a couple months ago. You may remember us in a previous podcast talking about an article relating or sharing the fact that the IRS was under hot water for auditing low-income tax filers at a higher rate. In an article from Accounting Today, they reported that the IRS is taking steps to increase the audit rates of higher income tax filers. The chart provided by the IRS shows that there is an uptick in audit rates for the 2019 tax year from September 2021 to May 2022. It appears that the income ranges starting over 50K have nearly doubled in terms of audit rates. The article also pointed out that for low tax income filers, the IRS uses technology to identify discrepancies between the tax returns filed by the individual taxpayer and the information filed by their employers, as well as businesses to target for investigation, which is kind of what we speculated a couple months ago when we talked about this. The IRS, however, states that the audits of high income tax payers require the IRS employees with the necessary expertise to process, which due to resource constraints, they have fewer of. The IRS is quoted in saying that while these statistics provide a more real-time estimate on the ongoing work that the IRS is taking steps towards addressing high-end non-compliance, the resource constraints limit the work that the agency is able to do. So the article doesn't indicate what the actual steps the IRS is taking to obtain the higher audit rates, nor does it give a sense of what the target rate should be. The focus seems to be more on, to change the narrative that the IRS was targeting low income tax filers by showing the statistics. In fact, the IRS commissioner was quoted in saying, I'm tired I'm sorry, he's quoted in saying, "I'm tired of having to deal with this issue. We audit high income taxpayers more than any other category in the Internal Revenue Service. Taxpayers reflecting over 10 million of income are audited at a rate exceeding 7%. So what kind of stood out to me when I was reading this article and looking at the charts was that in most income ranges, they were audited at a rate of less than 1%, which seems to be a little bit low. Even though they've doubled, that means that they were below 1% in the past. So my question to you guys is, should we expect there to be a continued increase of audits for high income tax filers? And should people be a little bit more concerned about their previous tax filings?
I doubt it, and I think I would raise the flag of being more concerned if we see substantial funding for the IRS. Without that, I just don't foresee, best wishes, and just isn't going to get there. So yeah, I have doubts that we will see any substantial difference without a change in their budget.
I'm going to take it a step further, but maybe I'm conspiracy theorist in thinking this, but I'm not. I'm going to say that I've seen conflicting. In that article, they say that they audit the high income taxpayers at a higher rate than low income taxpayers, but so often you hear the narrative that it's the opposite of that. And I'm just going to go on record and say I don't know that I trust any of the numbers being put out on this topic in terms of what's actually happening, because you know what, that sounds like something that would be there would be a lot of incentive to give a different answer there than what might be real. And so I don't know that I really trust any of it. I think that the premise that high income taxpayers and low income taxpayers should be audited at the exact same rate is maybe a little questionable in the first place, because the issues that are present in each, the issues that apply to smaller tax returns are different than those that would apply to the larger ones. And so, not to say that I know which ones should be audited more or less, but just the idea that those challenges are different in each of those cases would kind of cause me as an outsider to look at it and go, well, yeah, maybe there would be a different audit rate if suddenly, if one half of the return population has a really complicated issue, then I would expect that to be a higher rate. And so I think the other thing is that in the higher income taxpayers, if they're more likely to bring in professional help, whereas low income taxpayers may or may not, I think just that fact, right? Whether that's fair or not is its own discussion, sure. But just the idea that there's a group of people who have paid for professional help to ensure that they're getting the right return, and then another group where they're not. As if you're the IRS looking to audit people, you might look at those two, groups of people differently, and it might be right or fair or not. But that's the reality, and so I think it's a complicated issue, and to really have an opinion on it requires understanding what those issues that we're even auditing are. And so, yeah, I'll leave it at that. But that's kind of what I think about it.
I think those are two valid points of view from you guys, because I do think that's why there wasn't necessarily an indication as to what steps they are taking to increase these numbers. Because to Ty's point, I think that they need more resources in order to do that. And without knowing what that could be, or if they're going to be able to get those resources, they were silent on that, right? And then in terms of what the rate should be, they're also silent on that as well, because I think that is a more complex kind of question. And to what, as soon as they lay out a target, that's going to be something that they're going to be measured against too. And they probably don't know what that rate should be or what actually is appropriate. I do think that what they're really trying to do, which the article, by kind of being silent on some of these other facts, is just saying they aren't targeting, the low income tax filers. I think that they could have simply probably stood by the point that the way that they audit the low income tax filers, and just in terms of complexity, is a lot easier because it is mostly digital, or in terms of utilizing technology on that side, and they can't do that with more complex ones, which makes sense on that case. But I think what they were really focused on is just trying to change that narrative, because it was not a good narrative. It obviously went all the way up to Congress, and that's such and that nature. So I think that they're really trying to just mitigate the negative press that they were getting. And so I don't know if this helped with it, but it did show at least a slow and uptick in the numbers. But I think that's what the point of the article was actually for. So Ty, do you have our next article?
Yeah. So the article, or the topic that I'm going to share here, is the next in the series that I started in our last episode about what craft distillery operators want and need from their accounting function. And so in the prior episode, in the last topic, I introduced this idea. I gave it a number. I said, there's this idea in my head that you have kind of that level 1 operator who just wants that baseline of accounting from their accounting function, and that mainly results in what's absolutely necessary for compliance purposes and to track what happened with cash on a historical basis, in the past kind of thing. Where did the cash go and what's currently in the bank account kind of thing. And so we talked about that on a prior episode, and I'd encourage viewers who are interested to take a look at that episode. I'm going to pull up some bullet points that I wrote out about this next topic in the series, and share my screen on that as I go through this, so that our viewers can better visualize some of the things that I'm going to say and that I think that we'll be referencing as we talk about it. So give me 1 second here. So essentially, kind of going into level 2, and I'll kind of give our audience a preview that I'm in this series, I'm going to kind of outline the 3 levels that operators, I think, kind of get to in terms of operating a craft distillery. And it's also applicable, I think this paradigm's applicable in a broader sense to small businesses in general, but kind of 3 levels that operators get to in terms of what they want from their accounting function and their finance function. And so comparing to what we were just talking about, or re-summarizing from a level 1 operator, the way I define a level 2 operator is somebody who is at a point that they really want to know how their business plan, how their operations is going to affect their cash flow. How's it going to impact their cash? How has it impacted their cash flow already? And how will their plans affect their available cash going forward over at least the next 12 months? Sometimes I think what they care about in some cases a little farther out, anywhere from 12 to 24 months. I'm sure in the abstract, many might care about how their plans affect available cash farther than that. But I think most will also admit that that would be impractical to really know anyway, in most cases, in any reasonable level of detail. And so that's kind of the core issue. I think the core distinction between this next level that I'm talking about today and what I talked about previously, this distinction of the next level 2 operator, is that they actually want their accounting function to help them understand future cash flow, to help them understand future available cash, to help them put their business plan in the context of cash flow. And that's something that I would say the level 1 operator isn't looking for, but the level 2 operator is. Now, that being said, as I talk about these different levels of operators, I'm making this presumption that each higher level still wants all the things that the previous level wanted. So while a level 2 operator adds on the want and need to understand and project future cash, they still want all the compliance things that the level 1 operator wanted as well. Now, I bring up here early before, I'm not going to talk today about kind of the last level in my paradigm of a level 3 operator, not in detail anyway, but I wanted to bring up what that is and kind of throw that out there to make the distinction as well. Because what I find is that sometimes operators, it's not as smooth as they're level 1 and then they become a level 2 and then later they become a level 3. I find there's often externalities that cause a level 1 operator to get shoved into being a level 2 and level 3 operator at the same time. So what do I mean by a level 3 operator? What would make an operator the next level above just wanting to understand and manage future cash, really use accounting to understand their operations and their business plan? What would be a higher level than that? Well, the higher level than that is when they have external banking and investors and other folks that are requiring them and more treasury management type functions that they might need help with from their accounting and finance department, right? So that higher level would generally get us into having to be what we call GAAP compliant, which is generally accepted accounting principles. Those accounting standards are defined by the Financial Accounting Standards Board. They're also partly defined by the Securities Exchange Commission. And many small businesses don't ever have to get there. They don't have to comply with that. They can use methods of accounting that are really that work well for understanding cash flow that aren't necessarily as good and technical as these GAAP standards that I'm referring to. But if you end up having to deal with a bank where you're submitting financial statements there, that would be one reason why you would have to be GAAP compliant, even if it wasn't necessary within your own internal management function. You don't need that GAAP compliance to understand and manage your business, but you might need it so that the bank can understand your business in order to be willing to maintain a lending relationship with you. And similarly, your board, if you have outside investors, may require something similar for similar reasons. Or if you are trying to raise funds, you may not have the outside investors yet, but you're trying to raise funds, or you are working on maybe selling the company. And then beyond that, I would also put in the category of a level 3 operator. Maybe you're out there trying to buy other companies, and so you need your finance function, your finance and accounting function, to be able to help you do financial analysis on the proposed transactions. I would say that's all kind of in the level 3 scenario. And so I'm gonna back off talking too much about level 3 and get us back into talking about level 2, which is in my mind really about cash flow management. But I just wanted to point out that I wanted to make the distinction between level 2 and 3 to preview kind of what I'm going to tell everyone about or talk to everyone about later in later episodes. I'll bring up this level 3, but I wanted to make that distinction here because of the phenomena that I see where you have a level 1 operator who's not even using their books to manage the business or project future cash flows, but then they go out and get a big bank loan, or they get an outside investor. And so suddenly they are pushed into not only all these things we see as a level 3 operator, but they also typically have to start doing the cash flow planning as well. And so they get shoved into level 2 and 3 at the same time, not by their own choice, but by externalities. And our advice, what we believe is that it's better and healthier for the business and for the organization if you make the change yourself gradually over time. If you go from level 1 to level 2 kind of on your own, that you kind of as you're growing the business, you grow up as an operator as well, and you demand a level 2 kind of needs and wants and needs from your accounting department before you get forced into it by level 3 needs, essentially. We think because it can get confusing and be a little bit chaotic if you're trying to go from level 1 all the way to level 3 without ever having gone through that level 2 process. And then the other thing that we sometimes see is we see operators who have level 3 needs. They're sitting in level 1 and they have level 3 needs, and they just try to bypass level 2 altogether. So it's not uncommon that they may get into a scenario where they've got a big bank loan that requires they have GAAP financials, and they don't anticipate, or they're trying to get a bank loan that's going to require GAAP financials, and they don't anticipate that the bank is going to ask questions that would require the cash flow planning that you would do in level 2. So they jump to doing level 3 work, and without ever implementing level 2 work. And eventually that catches up with you as well, one way or the other. And so yeah, we would also recommend, don't just implement a level 3 accounting department while not implementing the level 2 work, because we find that creates chaos and dysfunction in your accounting and finance operations more often than not as well. But all of these things happen in the wild, right? And so I bring them up here and now kind of get us back into talking about what I really wanted to talk about today, which is, okay, what is this level 2 wants and needs? If it starts with this idea of we want to be able to understand cash flow, and we want to be able to understand how that affects available cash for future months. I would propose that while that sounds like you can put that in one sentence, the operator wants to understand what the cash impacts of their business plan is in future months. You can put that in one sentence, but I would say the implications of that are much deeper than one sentence. And that's the bullet points that I'm showing on the screen here, is that when I hear that's what the operator wants, then I would suggest that infers that the operator really wants and needs these things that go along with that these are the path to being able to do that. And one of the things, the first thing on my list here is, that's not the kind of thing that you're going to get directly from your general ledger accounting system, whether it's on cash or accrual basis. Even if you're, the layperson may think, oh, well, if my accounting system's on a cash basis, that makes it all the better to project future cash, right? No, it doesn't, because all it's showing is what was recorded in cash in prior periods. It doesn't provide any information about what's likely to happen cash-wise in the future, right? And so I would argue that your accounting system is not sufficient for providing that kind of information. Aside from your normal accounting system, you're going to need what we refer to as a planning model. We find that it's usually Excel based. Sometimes there's apps or software that you might use instead of Excel, but in the vast majority of cases in the small business environment, it's Excel based. And that model is something that forecasts future income, loss, cash flows for 12 to 24 months. It's based on business plan assumptions and targets that the operators have for that business. Sometimes you hear that called as an operating plan. And like I said earlier, we just call it a planning model for shorthand. Now on the accounting GL side, we mentioned in the prior episode that at the base level, cash accounting could be done. It's possible that some version of cash accounting could be done just to meet compliance needs. But we believe that the proper accounting for any business to use for this purpose, particularly when you're talking to get to that level 2 of being able to understand and forecast cash flow, is you need to do accrual accounting, and you need to have accrual accounting based reports for your things like receivables and vendor payables and prepaid items and payments that you've collected in advance of providing your products and services. That's all the stuff of accrual accounting, capturing that kind of information. And that's really why accrual accounting is what's needed in order to better understand future cash flow, because it's really your receivables, not what you collected in cash yesterday on last month's financials. It's what's sitting in your receivables under an accrual accounting concept that you expect to collect in cash in the future, that actually gives you information about your future cash flow. And so that's why, it's counterintuitive often to the layperson that one of the primary building blocks of being able to have a plan that shows future cash flows is having an accounting system that's actually not on the cash basis, but on the accrual basis. And then you also, I would say at this point, you also want proper classification of expenses so that you can do margin analysis. You want to know the difference between the gross margin on your products or services and what we would call your operating expenses, your OpEx. And in the distillery world, those operating expenses that are not in your gross margin would be things like advertising and promotion, your sales department, and other kinds of overhead costs. And with that, I would say that you also want to be able to do margin analysis by product, right? You want to be able to, by channel and by product. In the distillery world, we have direct to consumer, we have tasting rooms, and we have e-commerce, as well as selling to wholesale. And the margins for those things are likely to be different for a variety of reasons. So understanding what is the margin by channel and why is it different by channel is helpful, because what ultimately your future cash flows will be may depend on your channel mix. How much do you sell DTC versus wholesale might have a big impact on how much future cash flow you have, as well as what exact product are you selling. Some products may have a higher margin than others, as well as where are you selling those products. Some locations that you sell your products, some states that you sell your products in may have better or worse margins or just be more expensive to operate in. So all of that is going to play into the analysis, and having information about all of that will play into what you think your future cash flow is. And then having some kind of budget, what people think of as budgets, again, we call it a plan, but planning and budgeting to me are kind of the same thing in that regard. And having a budget by department for expenses, you're in the distillery world, again, we might be thinking about what are your advertising and promotion expenses? What's that department's expenses? What are the production department expenses? What kind of expenses do you have associated with your retail environments, your tasting rooms or your e-commerce operation? And what kind of expenses are categorized as general admin? Having budgets for those, and then seeing how, is your leadership team managing to those budgets? Are you exceeding those budgets? Are you coming under those budgets? That information, measuring that on an ongoing basis, where you are next to your budgets, will help you understand what's likely to happen in your future cash flows, right? I mean, the thing is if I set a budget for some department's expenses, like even general admin, if I set a budget and I can see that month after month we exceed that budget, I can tell you that we're likely to be spending more cash in the future than the budget would suggest. That's good information to have, right? If you're trying to project future cash flow, if you're trying to understand what cash will be available to this business in the future. And then also part of that is I would set as a different topic than just expense budgets by department is purchasing plans for inventory items and your CapEx, your capital improvements. And in the distillery world, some of your purchasing plans are going to revolve around the raw materials, whether it's grain or neutral grain spirits that you might be having to purchase at various times. If you're putting down barrels of liquor, it might be the empty barrel that we're talking about, right? And then packaging. I think everybody in this industry knows and has felt the burn of not having of the supply chain shortages and dealing with glass and cork and I mean tops by that and things of that nature, and then you still have to get your labels too, and all of that. Those are big, for a lot of companies, those are actually pretty big purchases, and particularly if you're strategizing to deal with supply chain shortages by buying a lot ahead or something of that nature, having that in this plan for cash is super important. And then when I said capital expenditures or CapEx, what I mean by that is the equipment and the facilities used for the production process. It could be equipment used in the distillation process or in the bottling to create your cases of finished goods, but it could also be remodeling facilities, remodeling your production facility, or even remodeling or putting a good, a really slick retail face on a tasting room. All of that would kind of fall in this idea of CapEx that needs to be in this plan that we're talking about and is something to analyze. So one of the things that I guess I went over this in a fair amount of detail and used a lot of words, and I'm going to turn it over to my colleagues here to comment on it. But I think what I hope the audience gets out of the kind of just the amount of words that I'm putting around this is that level 2 is substantially more work than level 1, right? And so once an operator gets to that level 2 area, that level 2 of wants and needs from their accounting function, they have to anticipate that they need more expertise and they need probably more hours dedicated to them in that accounting and finance function in order to achieve all of this. So, I think I'm open to any comment or feedback from my colleagues here, but I'll frame a couple of questions for them. One of them would be, do you think I'm on the right track in terms of, if you think about what level 1 is, would you say that this level 2 that I prescribed is kind of makes sense as the next level from level 1? And then the next question is, within this level 2, what do you think about these items that I have here on the screen, these bullet points of what is inferred would be needed if you ultimately want to manage future cash flow? If you're a level 2 operator and you ultimately want to have an accounting function that helps you forecast and plan future cash flow, I'm saying these items on the screen are implied that you want these as well. That's you would have to want these in order to want that, because they go together. And I'd love your feedback or thoughts on that.
Yeah, I thought this was a really nice kind of layout in terms of the discussion points, because I do think that there's a big step between going from level 1 to level 2. And in terms of even the quantity of the words that you had, it does express and really demonstrate the fact that there are a lot more in the level 2 needs in order to really maintain that level. The thing that I really appreciated in your conversation that I don't think we can stress enough is the amount of work in terms of hours or expertise it's needed to maintain that level 2 kind of support in managing the cash flow piece is quite a bit. I mean, you have to make sure level 1 is in order. So I guess not only just be able to jump from level 1 to level 2 or jumping from level 1 to level 3, it's like you need to make sure your day-to-day and your kind of compliance information is in working order before you can actually get to this next piece. Because, and especially when you start looking at a cash flow planning model or any forecasts or anything of that nature, if you don't have good information going into that, it's going to be pretty, I wouldn't say useless, but it's not going to be as effective as it would be if you actually had the right information in. The other thing I wanted to add to this, in terms of not only comparing your actuals to your plan, whether it be your operating plan or your budget, is to really also add a layer of comparing the actuals to your updated forecast or your updated plans, because a lot of times those things can change. If you're midway through the year and all of a sudden you realize there's a huge increase in sales that are expected going forward, that you may need to plan for more spending, plan for more, other types of things that come along with that. And so you should, layer that into your expectation and your model, and then compare to what your revised plans are, because what you'll find is that, how good are you at planning for these things that kind of come up? And when those things come up, like an increase of sales, are your assumptions and all the other categories that could either increase or decrease as that come to fruition? And so you can get better at continuously working that skill set. So that was my kind of 2 cents on that. How about you, Charlie?
Yeah, no, I think this is a great list. And I've worked with business operators that I feel are in each of these levels, and I've seen kind of the differences. And so for me, it's like when you're in that level 1, you're trying to keep afloat. You're trying to make sure that all your baseline needs are met, that your tax returns are filed and that sort of a thing. And that's really crucial. You need that. And so I think it's a really good thing. And then I think, in the second level is kind of one of the most interesting ones, because it's the one where the output of what you're creating through that process is not super defined. In level 1, you're putting out a tax return that's going to look like, other tax returns for businesses of that type. And in level 3, we're putting out GAAP financial statements that are supposed to be governed by guidelines that make them uniform amongst other similar, financials of that type. But in level 2, we're looking at how are we running your business and planning for the things that you do, and what can we do to actually influence the operations of the business? Because in the other 2, we're just reporting, right? At least the way I'm looking at it is that they're focused primarily on reporting. And so for me, that's the level that the business owners tend to be most interested in once the other ones are satisfied, because it's the only one that they can use to really operate their business more effectively. And like you said, it's really hard. It requires looking at a lot of different pieces of information. And I think it's okay to have more than one source of kind of truth for that level of review. So you might want to look at what actuals are. You might want to look at what the budget is. And just like Tammy said, you may want to look at where am I in relation to what I thought the budget was going to be 2 months ago. And it's okay to make comparisons and make, analysis on any mix of those topics, because in any of those, you can kind of come to a conclusion from it. You can say, well, if I planned that it was going to be this number and then it turned out to be double, then when I try to plan it next time, I might expect something similar to happen there too. And so I think it's the most interesting discussions that I've had with owners were about these level 2 topics. And I think it's also the hardest, maybe this is biased, but in my experience, it's been the hardest one, because there's a lot of subjectivity, at least with the ones that I've worked in what those questions should be and how we should ask them and how we should define that workflow. And so it makes sense to me that that would become so time consuming. But just to put a cap on it, I agree with everything that you said in terms of you can't move to really level 3 until you get past level 2, because all those thoughts that you're forming in level 2 are going to be what kind of drives how you structure your level 3 work. And so, yeah, no, I think it's really interesting, and I'll be eager to kind of learn more as you move through the other stages of operating a craft distillery.
The other thing I wanted to add to this too is a lot of times what you'll find is people will ask for a cash flow model, or they'll say, oh, we need a cash flow planning tool when they're already in a cash crunch. And I would say that is way too late. One of those things that it's so hard to navigate through a cash flow situation or a challenge when you're in the middle of it, and then planning for it. It's a little bit even not as effective if you're already in the midst of trying to deal with that. It is great to really start thinking about, if you're in level 1, as you're growing into like becoming more into the level 2 area, to really start some of these planning tools in advance so that you can kind of predict those things, so that there's nothing, there's nothing worse than, being in the middle of the month going, oh, I don't have any cash. And it's like, why didn't I plan for this? Well, I wasn't even thinking about it. And so now I should start planning for it. Well, it's like, well, a lot of things that you could have done to probably prevent that, or at least see it coming, it's the time has passed. So really think about that in advance, because that is where level 2, it does become a lot harder when you're navigating through that, or you're getting loans and you're trying to negotiate all these various different things. It's so much more effective if you can do it before you actually are in dire need.
Yeah, thank you both for your kind of input and feedback on this. And I think that great comments. And I think Tammy, what you were just saying, that really resonates, and it parallels with kind of the paradigm and the discussion of voluntarily get into level 2 when it's time to get into level 2, because that point that you can get into a cash crunch and then then you realize you have these level 2 needs, it could be too late, right? And so saying it within the context of the paradigm is, a lot of operators actually have level 2 needs, and they just haven't accepted that yet. They want to operate in a level 1 world when they really have level 2 needs. Excuse me. And also wanted to highlight, kind of one of the points Charlie was making, because that also really resonates with me in terms of this level 2 is where a lot of the fun is at for us. And it's where, as a firm, I think we do some of our best work with clients is in the level 2 zone. While we can do work in the level 1 zone, and we can do work in the level 3 zone, I think we intentionally kind of look for the level 2 operators that we can work with. That's really our sweet spot. And so, yeah, because it's fun, and for all the reasons that Charlie was talking about in terms of being able to really help with managing and improving the business and its operations. So, like I said, I think Tammy and Charlie here for their feedback. I would invite our audience, if you have thoughts or feedback on this, throw them in the comments, because I'm presenting here with the intent to improve this content and keep putting it out in an improved fashion over time. So I'd love your help and comments on that as we go. And in what you can expect in future episodes is, well, you guessed it, we're going to get into level 3. What are the level 3 operators' wants and needs? And then from there, what I'd like to do is shift from talking about the wants and needs of the accounting wants and needs of distillery operators, and jump into not just what do they want and need, but then how do you satisfy those wants and needs? What's the game plan? How do you actually do that? And I think we'll all at this table will have a lot to say about that too. So I'm excited to get into that in future episodes. All right, well, I will yield the floor back over to Charlie.
Awesome, absolutely. If you don't mind stopping the screen share, it'll get us back into a normal view here. And then I've got an article from Forbes that I think we can all have some opinions on. So there's the article's called "The Rapidly Expanding Cannabis Industry Needs to Get Its Marketing Act Together," a new report finds. And so they interviewed there was a press statement released by a person named Gary Allen, who's the CEO of New Frontier Data. And apparently they put together a survey where they were basically asking a bunch of cannabis business operators kind of how effective is their marketing? Do they feel like they're putting enough into it? Do they feel like the money that they put into their marketing is actually effective for the goals they're trying to accomplish? And so some of the feedback that they got was that they didn't feel like the people who were using these marketing applications weren't feeling like they were getting those results. They said that more than 80% of the people they surveyed were having problems getting the right message to the right audience. They said a lot of them reported working with shoestring budgets, nearly half of which were less than $50,000. They talked about what the different marketing channels were. They talked about digital marketing, which was apparently the lead strategy, and 83% of the businesses that they talked to said they were using some form of digital strategy. They talked about there was events, partnerships, public relations, and other kinds of ways that they do it. They talked about social media. Apparently, a lot of cannabis advertising is taking place on LinkedIn, which I think is a little funny because I do see the ads there, but I don't know that screams to me as the target market of the kind of cannabis users. It said Instagram and Facebook were also really popular, but it said one thing that was really heavily on the uptick was what they called programmatic advertising, which was using automated technology to either help get their message out to more people or to help make decisions on media buys, right? Which channels does it make sense to put our marketing dollars into? So even on the analysis stage is where they're trying to use those kind of solutions. And the reasoning is that basically what they said was that the volume and efficiency of these programmatic networks separate that channel from other ones like social and paid search. And it has a built-in safety net for compliance and a lower price tag. And so I know that, a lot of companies take a different stance on advertising. I know it's a different industry, but, Tesla is famous for having a non-marketing approach to where you don't see ads and whatnot. And he touts that he spends nothing on advertising. Whereas in the cannabis industry, it doesn't feel like you hear as much of that. And so I wanted to get your guys' take in the experience that you've, working with clients. Do you feel like in the cannabis businesses that you've worked with, is marketing and advertising a primary focus, or is it tend to be more geared towards production as the primary, function of the organization?
Yeah, I mean, we're in Oregon, and we've lived through cycles of this. When the market first kind of opened, marketing didn't really seem to be a huge focus. It was mostly production, and most of the community, I think the assumption by most of the community was that this was a production game, that there was this huge pent up demand, and there wasn't going to be enough product to meet the demand. And so if you could produce it, you could sell it. So why would you spend any time on marketing it, right? And so and I think that was how it kind of started out. And then we went through a period where there was an oversaturation of product, and I think that led to depressed prices and just a lot of dashed dreams of potential cannabis entrepreneurs who weren't successful during that period. And I think the market has shaken out, and I think I think it's now more of a mature market, at least in Oregon, where it's like most businesses, in the sense that there is on the kind of the farm side, the actual production side, there is a commodity issue there, in the sense of there are externalities that are going to affect supply and demand in terms of how much supply there is market wide, would affect how much you need to do in terms of marketing and selling your product. And it's really a function of price. Like if you grow it, I think you probably can sell it. It just, the price that you get if you're not marketing may not be as good, right? And so the advantage of marketing is going to be the price that you can demand for it. If you're a value-added manufacturer, like somebody who's creating an edible or a concentrate of some sort, then the brand behind your particular variety of doing that thing or that item that you are creating in that way is going to matter more in terms of the marketing. But marketing is also heavily regulated in this industry, right? They're not allowed to do certain kinds of direct marketing. They haven't been in the past. And so that makes it so that they can't just go all out on the traditional channels in terms of marketing as well. And I think that's led to, and then I think on top of that, you have the culture of the cannabis production world that before it was legal in Oregon, for example, there was a cannabis industry already. And the way of business there, you didn't go around advertising that you were basically a drug dealer, right? You marketed your product through relationships. It's kind of interesting, right? Because we're in the service business and we're used to relationship marketing in our world. Most products aren't relationship marketed, but because of the legal issues with cannabis, I think that you would call the way it was marketed before it was more out in the open, you would say the way it was marketed was more through relationship marketing. And I think there's still a heavy strain, pardon the pun, but I think there's still a heavy strain of relationship marketing in the cannabis community as well, for that reason. So those are some of my observations on this.
Well, you stole some of my observations, because I think that what I was going to say in terms of the strain of marketing that they were doing was more organic in terms of it's very definitely more relationship based. I think it's very social media based in that sense, where it's like it is a community and a culture, and that seems to be where their focus is, which does make sense for all the various different kind of the historic kind of growth of that business as well. But I do find though that once a company is well known or has a strong following, they have a loyal brand base that they can kind of target to or market it to. I think the other thing that I do find interesting is from the retailer stores. That's where it's a little bit more challenging, because especially here in Oregon, I mean, you can drive, just a block or two and see a lot of cannabis selling retail stores. And it's like, how do you choose which one you're going to go into? And then not even once you're in there, how do you choose what you're going to buy? And so it's very interesting to see how those retailer shops are going to market to be able to draw you into their store. And is it going to be their storefront, how cool they are, or, I'm not quite sure yet, because it does seem to be heavily saturated, at least here. So it'll be interesting to see how those kind of those businesses last, or kind of how they grow in this environment or this area.
Absolutely. I think those are good points. And yeah, like you said, I think it'll be interesting to see how that whole, industry evolves over time. Do you have another article we can talk about, Tammy?
I do. So I found another interesting article from Accounting Today involving reality TV stars and tax evasion. So you may be familiar with the TV show Chrisley Knows Best. I will have to admit that I've watched a few seasons, so I'm pretty familiar with the show. But Apple TV gives a great kind of description. It describes the series as a real-life family comedy, which follows Atlanta-based multimillionaire Todd Chrisley, his devoted wife Julie, and their 5 children who live a seamlessly perfect picture Southern life with everything that money can buy. Well, earlier this week, Todd and Julie were found guilty of tax evasion and conspiracy to defraud community banks. Their accountant was also convicted of tax crimes and conspiring to defraud the IRS. So according to the article, before the Chrisleys became famous, they acquired over $30 million in personal loans with false bank statements, audit reports, and financial statements. The money was spent in supporting their lavish lifestyle of designer clothes, luxury cars, real estate, travel, and to pay back on loans. Around the time that they became the TV reality stars that we know of today, Todd filed bankruptcy, which freed him of more than $20 million in loans. Although money was coming in from the TV show, the Chrisleys avoided paying delinquent tax payments by moving money around between various banks under Todd's name, Julie's name, and even Todd's mother's name, who was also featured on the show. Todd was bold enough to go on a radio show and say, I quote, "And obviously the federal government likes my tax returns because I pay $750,000 to $1 million just about every year. So the federal government doesn't have a problem with my taxes. Well, that may not have been true. So along with both Todd and Julie being convicted of bank fraud, conspiracy to commit bank fraud, and conspiracy to defraud the United States and tax fraud, Julie was convicted of obstruction of justice, and their accountant was convicted of filing false tax returns. They do plan on appealing the verdict, but if in their sentencing hearing, which is later this month, they could face up to 30 years in prison. In an interesting twist, the USA Network recently renewed the show for its 10th season. And so now that is some real life drama, if you ask me. So the question I have for you guys, will the show go on? Or do you think that with the publicity of this case, they will receive the full sentence?
I would like to say that they will receive the full sentence, but all these past instances of people getting into trouble for doing similar things have kind of taught me that maybe that won't happen. As I look at this one, it's pretty funny because, falsifying the bank statements is like a pretty silly form of getting caught. I mean, basically, those banks are all federally regulated and they can share their bank statements with the government easily, at a request. And so it just seems like a silly thing to do. And to be so public. I mean, if you basically live a hyper public life, and, everybody who considers tax evasion should think twice. But if you're going to go and have a reality show and then talk a lot of trash about how great your tax returns are, then to subsequently get taken away for tax evasion just adds that many layers of hilarity to it. And so I hope the show doesn't go on. I think it's kind of like, to me, it sets a standard. If it does go on, if these guys can do all this stuff and then just still be famous, it's like, what is, John Q. Everyman supposed to do when he sees that? Because I'll tell you what he's going to think he should do is do exactly what they're doing, right? Get away with it. So I don't think it's good. And let's see what you think, Ty.
Well, I mean, in terms of the show going on, I think the show can go on even if they go to prison. I mean, Tiger King became pretty famous after he went to prison. So I don't think the two things are mutually exclusive. But I do think, to kind of a variation of what you were saying, Charlie, I think unfortunately for them, they would have been more likely to maybe avoid prison and get a reduced sentence of some sort if they weren't so public. But the fact that they are these kind of ultra public figures, I think that's, the government really has an interest in going as far as they can with this and not just settling it, because as we talked about earlier in this episode, the budget for federal enforcement is pretty limited. And, the only leverage the government has is when there is a high profile case, really making an example of that case, because, that's all you can do in a situation where you really cannot force compliance across the entire general public. That is impossible with the budget that they have. It's impractical in any scenario, but they can't even enforce compliance across what we might think of as a reasonable percentage of the public. And so, you have to default to enforcing draconian compliance, the draconian measures against the few that are publicly visible that get caught being naughty. And so I think they're probably in for a world of hurt if the government is going to do their job at all on this.
Yeah. I think that you're 100% correct on that, because it is one of those things where, they were one of the top rated shows on USA Network. And so in terms of the reality family TV situation, they do have a lot of people watching it. And I think that because it was so flagrant in terms of how rich they were and how lavish their lifestyle was, and it's being filmed on that. And then to hear, that even before the show, which is, obviously they've completed 9 seasons, that they weren't, the reason why they live such a lavish lifestyle, or part of the reason, was because of these 30 million in personal loans that they ended up walking away from. So not only do I think that the government will want to use them as an example to really show folks about, like, don't do it, you will get caught, because this is that's most likely true, especially in the avenues that they chose to do the deception. But also I think that in terms of fans, that they'd be a little bit more kind of not wanting to support the family or to support the network and showing it, because at the end of the day, I mean, you can look at it one or two ways, like, oh, you know, if it would have been successful, like, why doesn't everyone else try to do it? Or it's kind of hard when you're watching somebody or a family thinking that they're this rich family, self-made, multimillionaire, all this stuff. And then what the reality actually of the reality is that it wasn't so true. It was all based on lies. And I think that can be kind of shocking to those fans that are watching them and supporting them. If you're a reality TV show, sometimes kind of person who likes to watch a lot of it, you may already predict that what you see on TV is not real, but you also may be like, oh, you know, they don't have it so good. And so I don't like them anymore. So we'll see. But I'll let you know once I hear what their sentencing turns out to be, or if they end up walking away from this as well.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Thanks for watching. Thanks for listening. And please tune back in again next week for more business updates from an accountant's perspective. Also, check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to the nonprofit space. Thank you.
Bye.